Scalping is a trading strategy where traders aim to make small profits from frequent trades throughout the day. Have you ever heard of the trading strategy called scalping? Unlike long-term strategies, scalpers hold positions for only a few seconds to a few minutes, exploiting even the tiniest price fluctuations. This quick-fire approach requires a keen eye, lightning-fast execution, and the ability to act decisively in a rapidly changing market. In today's video, we'll learn about a cool trading strategy called scalping. Just like catching quick waves in the ocean, scalpers jump in and out of trades throughout the day, seeking small profits from tiny price changes. But how do they do it? It takes quick thinking, fast actions, and the ability to adapt to the ever-changing market conditions. So if you're interested in learning more about this dynamic trading approach and how being swift and nimble can lead to great opportunities, come and join us as we explore the exciting world of scalping. They do lots of trades throughout the day, trying to make small profits from tiny changes in prices. Unlike long-term strategies, scalpers only hold their positions for a few seconds or minutes. It takes quick thinking, fast actions, and the ability to adapt to the market changes. The goal is not to hit big profits at once, but to make many small gains that add up over time. So come with us and explore the exciting world of scalping, where being quick and nimble can help us catch great opportunities in the market. 1. Benefits of scalping. Scalping offers several advantages that make it an attractive strategy for certain traders. Firstly, it allows for potential high-frequency profits, as scalpers can execute multiple trades in a single day. The cumulative effect of these small gains can be substantial. Secondly, the quick holding period means less exposure to market risks compared to longer-term trading strategies. While longer-term investors may face uncertainties over days, weeks, or even months, scalpers are in and out of the market swiftly, minimizing the impact of unexpected events. Additionally, scalping can be less affected by market trends and economic events, making it suitable for choppy or sideways markets. Even in uncertain market conditions, scalpers can find opportunities to profit from short-term price movements, providing some stability to their trading approach. 2. Scalping techniques. To be successful in scalping, traders use different methods and tools. One common way is using technical analysis to find short-term patterns and trends in prices. They often use indicators like moving averages, support and resistance levels, and oscillators to know when to enter and exit trades. Scalpers also pay attention to liquidity and volume. They want to make sure they can buy and sell quickly without big price changes. So they prefer assets that are easy to trade and have small differences between buying and selling prices. Besides that, they might use special tools like Level 2 quotes and time and sales data. These tools give them more details about the order book and real-time transactions. With this information, they can make smart decisions quickly while trading. 3. Risk management. While scalping can be profitable, it comes with its challenges, especially related to risk management. As positions are held for a short time, the potential for losses is always present. Scalpers must be disciplined and set strict stop-loss orders to limit losses. It's crucial to stay focused and avoid emotional decision-making, given the fast-paced nature of scalping. Risk management is the bedrock of successful trading, and it's even more critical for scalpers due to their high-frequency trading nature. Remember, one big loss can wipe out many small gains, so always prioritize capital preservation. 4. Scalping best practices. If you want to become a scalper, there are some important things to remember. First, create a strong trading plan with clear rules for when to enter and exit trades. This will help you stay focused and not make quick, unplanned decisions. It's also important to pick assets that are easy to trade, with small differences between buying and selling prices. This way, you can keep transaction costs low and trade efficiently. Stick to these best practices, and you'll be on your way to becoming a successful scalper. It's also essential to maintain a calm and focused mindset, as impulsive decisions can lead to costly mistakes. The fast-paced nature of scalping can be mentally demanding, so taking breaks and staying patient is essential to stay sharp throughout the trading session. 5. Scalping demo and examples. To help you grasp the concept better, let's dive into a live scalping demo. I'll walk you through a few trade examples, showcasing how scalpers identify opportunities, enter positions, and exit for profits. This hands-on demonstration will give you a real-world feel of scalping in action. Remember that practicing in a demo account is a great way to hone your skills before venturing into live trading. It allows you to gain experience without risking real money, and it's an excellent platform to fine-tune your scalping strategy. 6. Potential risks and drawbacks. While scalping can be rewarding, it's important to acknowledge its potential risks and drawbacks. Due to the high-frequency nature of trades, transaction costs can add up quickly, eating into profits. The bid-ask spread, commissions, and other fees can significantly impact your overall profitability. Moreover, some brokers may have restrictions or fees on scalping activities, so it's crucial to choose the right broker for your scalping needs. Research different brokers and find one that accommodates and supports scalping strategies to optimize your trading experience. 7. Scalping tools and technology. Scalping, a fast-paced trading strategy, relies on various tools and technology to succeed in the markets. Scalpers need efficient trading platforms that enable quick order execution and seamless trade management. Technical indicators such as moving averages and Bollinger Bands help them identify entry and exit points based on price movements and trends. Level 2 quotes and time and sales data provide valuable real-time insights into market depth and transaction information, aiding in making informed decisions. Moreover, news aggregators keep scalpers updated on critical market events that could impact their trades. Utilizing these tools and technology, scalpers can navigate the fast-changing market environment and capitalize on short-term price fluctuations effectively. Automated trading algorithms are also popular among scalpers, as they can execute trades at lightning speed based on predefined criteria. However, it's essential to thoroughly test and optimize any algorithm before using it in live trading. 8. Scalping and emotional discipline. Scalping can be mentally demanding, as traders need to make quick decisions and manage multiple positions simultaneously. Emotional discipline is paramount in scalping, as impulsive reactions can lead to disastrous outcomes. Practicing mindfulness and maintaining a positive trading mindset can help you stay focused and composed during intense trading sessions. Accepting that losses are a part of the game and sticking to your trading plan will help you maintain emotional balance. 9. Scalping and market conditions. Scalping is highly influenced by market conditions, and successful scalpers are adept at adapting their strategies accordingly. Market volatility, liquidity, and trading volume are crucial factors that impact scalping outcomes. In high volatility markets, price movements can be rapid and unpredictable, requiring scalpers to stay vigilant and act quickly. Liquidity is essential to ensure smooth trade execution, while low liquidity can lead to slippage and increased costs. Scalpers may choose to operate in specific markets or instruments based on their liquidity levels. Additionally, market conditions during major news releases or economic events can be particularly volatile, affecting scalping strategies. Scalpers need to be adaptable, constantly assessing market conditions and adjusting their approach to capitalize on favorable trading opportunities and navigate challenging environments effectively. 10. Scalping and time management. Scalping, as a fast-paced trading strategy, requires effective time management to be successful. Since scalpers make frequent trades within short time frames, they must be able to quickly analyze market conditions, identify potential entry and exit points, and execute trades with precision. Time is of the essence in scalping, and even a few seconds can make a significant difference in the outcome. To manage time efficiently, scalpers need to stay focused and avoid distractions while actively monitoring the market. They must also be disciplined in adhering to their trading plan and not linger in trades for too long. Proper time management allows scalpers to maximize their opportunities, make timely decisions, and react swiftly to changes, all contributing to their ability to capture quick profits and navigate the fast-paced world of scalping. Final thoughts. In the exciting world of scalping, every second matters and precision is the key to success. If you are passionate about short-term trading, scalping can offer a thrilling and potentially profitable experience. Remember to start small and gradually increase your position size as you gain experience and confidence. Never risk more than you can afford to lose, and always trade with discipline and a well-defined plan. That's it for today. If you enjoyed this video, make sure to hit that subscribe button and don't forget to give this video a thumbs up. Let us know your opinions in the comments below. Thanks for watching, and we'll see you in the next video.